Welcome back to Futures with Lichtenstein and Hinks. I want to bring in our next guest. Today we have Bob Iaccino. He is the, again, that's to discuss some of the details as far as the resignation of Gary Cohen. I'm sorry, that's Bob Iaccino, the founder and chief strategist of Path Trading Partners, to Futures with Lichtenstein and Hinks. Bob, I can't think of a better person to have with us here today to break it all down. First and foremost, let's start with that number. The ADP number came in this morning, 235,000. What are your thoughts on that?
Well, it's fine. I mean, it's obviously about 40,000 higher than was expected. I saw ranges between about 190 and 205. So let's kind of round it and say it's 40,000 better. It's a good number. I mean, it does not have a very good correlation to non-farm payrolls. I think part of that has to do with the way that ADP is calculated, people that are actually on company payrolls versus structural shifts and strikes and things like that can cause differences between the two numbers. So looking back at the correlation between ADP and non-farm, that correlation is uninspiring. Having said that, I think non-farm will be fairly strong. I think companies started hiring very small after the tax cuts, and it'll reflect in Friday's number.
Hey, Bob, good morning. Obviously, the big news of today is the Gary Cohen resigning. I've gone on record already saying this. I think this is an overreaction by this market. The futures were down 32 at about 5 o'clock, just after 5 Chicago time. Give us your thoughts on this. You know what I think. Go ahead.
Yeah, so I was just on with Oliver on the closing panel. I believe it was Monday.
Sure.
And I said that the market sell-off was an overreaction with trade tariffs. Yesterday, in some of my other responsibilities, I talked about Gary Cohen bringing a bevy of CEOs to talk about how bad the trade tariffs are, and he quit. So my guess is now that we're going to get trade tariffs, how deep they are, how large they are, how much retaliation comes out of the other countries, I'm now more worried than I was with Gary Cohen in there. Gary Cohen's very popular on Wall Street. He gives Wall Street a bit of calm. Probably the overnight reaction, you know this, Kevin, Ben does too. Overnight in the futures markets, we get overreactions. There's a lot of panic. If you're up all night staring at your position, then you're worried about your position. If you're worried, you're liable to act more emotionally. But I think as this kind of sifts out, we now have to discount the possibility of the tariffs a lot more than we did a day ago.
Well, let's talk about the dollar and the impact that that could have on the dollar, because everybody's talking about a currency war. I'm curious, where would that leave the dollar? How does the dollar act in a currency war?
So I put out a piece this morning, Ben, where I basically said this is further confirmation to me that the Trump administration has sort of a silent, weak dollar policy. I'm not sure it's so silent anymore. Right. Just keeping it simple, if we put tariffs on trade and we get retaliation, the potential trade war that everyone's talking about, there's going to be less economic activity cross-border, and there's going to be less of an incentive for the Fed to normalize rates. That's more dollars in circulation. That's a weaker dollar. That's just the way it goes. And we've seen that, quite frankly, across the commodity space over the last day or so, maybe not so much today. What we're seeing today is the effects of the potential slowdown in the global economy. Copper was down 1%. The yen was up. Yen and Swissy were up against the dollar. As you, to agree with Kevin, substantially more earlier, we had the yen about 75 basis points stronger. Last I looked, it was only about 32 basis points stronger, meaning the dollar was lower by that much. So I think that, you know, overnight we tend to see these overreactions. We now have to see how it settles in. God forbid we get a really strong wage number and tariffs on the same day, which would be Friday.
Yeah, I think there's a lot of things going on between now and Friday, Bob. A lot of reasons for people to be paying attention to these markets. Now, there's a lot of numbers today. This ADP number, you're right. It's a newsworthy number, but the correlations to the unemployment number don't always follow through. Like, for case in point, this is a private payrolls only, right? So it's a little bit different than the non-farm payrolls. What other numbers are you looking at as we go to the end of the week and the non-farm payroll number?
Well, I'm looking less at a number and I'm looking more at words, and those words will be coming from Mario Draghi. You know, talking about currencies, you're seeing that the euro is, let's call it broadly unchanged. against the dollar, but stronger against the sterling, stronger against the Aussie, stronger against the yen. I think the issue that falls on Mario Draghi now is we saw that he act with a bit of surprise toward Donald Trump and Steve Mnuchin's sort of very weak backing up of the weak dollar in Davos. Mario Draghi actually said the words. I'm paraphrasing, so he didn't actually say these words, but he said that, you know, we need to stick to the policies discussed, sort of meaning that the U.S. needs to have a strong dollar policy, and he didn't believe it. What is Mario Draghi going to say when he's asked about tariffs? What is he going to say when he's asked about the weaker dollar, which it's very likely to be weaker when he goes into the press conference? They're not going to change anything, but I think he's going to indicate that they will change things if this continues, and that means more QE and not less, or rather a continuation of QE. And it's interesting because the QE doesn't seem to be what's worrying the market. What seems to be worrying the market on the side of the euro strength is when QE is done and they start going toward higher rates. This could be much, much further down the road now.
Right, and you would think at that point the euro would strengthen even more so, but let's talk about the Canadian dollar. Let's talk Bank of Canada today at 9 a.m. Central Time. I've been watching this Canadian dollar poised, hanging out on those October lows. Recently just broke down below 78 even. Bob, with all the concerns about NAFTA, trade talks, currency wars, Bank of Canada today is going to be watched. What are your thoughts?
Well, do you see Mr. Pelosi actually saying, yeah, we need to tighten now in lieu of recent data and recent news? I don't see it. So I think Canada breaking the lows is probably the right play. Again, in terms of traders, usually we see these things coming into announcements and then they reverse to a certain degree where, for the example that you're stating, people will cover their shorts if they get a little satisfaction. That's probably likely to happen, but then there's probably some hard selling into it. You know, initially when I heard these trade tariff talks, I said, wow, this is classic Trump. He's talking about this, and then right away he brings up NAFTA a day later, saying, well, of course Mexico and Canada are not going to have an exemption unless, of course, they bend a little bit more on NAFTA. But with Gary Cohen gone, do we have now a complete protectionist executive branch in terms of Donald Trump's advisors? And it seems like we do. I can't think of a real globalist in the White House. Not because we need to be globalists, but we need a balance. So NAFTA now looks a little bit more tenuous than it did before, and I don't think Pelosi is going to say, yeah, we need to get after this tightening.
Yeah, I agree. Things do look a little bit out of balance here right now, and possibly or potentially not the best time to raise rates. But Bob, great to have you back on the show today. We look forward to having you come back in the near future. That's Bob Iaccino of Path Trading Partners.